Hello my friends, Mia DeBolt here, bringing you more transparency in trading. Thank you so much for joining me. So today I'm going to be reviewing day 11 and day 12 of the Funded Trader Repeat Challenge that I took and what the final result was. So did I fail the challenge because I was underwater 2.06 at the beginning of this week, or did I actually get a reset? So you'll find out at the end of this video. So I verified with the TFT support that I actually ended at 5 p.m. Eastern Standard Time on Thursday. So the countdown timer just disappeared. I don't know what happens to it. I think they do that out of confusion. I would guess it actually causes a lot more stress, which it did cause a little bit of stress for me because I didn't know exactly what time my challenge actually ended. Okay, so that brings us to Wednesday's trading. I knew I had at least 2 days. So this is going to be day 11 of the Funded Trader Repeat Challenge. Okay, so without further ado, let's dive into the charts and you can see exactly which trades I took. Okay, so Wednesday opened up and we had some divergence. So the S&P 500 took the previous day low, so did 30, and the NASDAQ was lagging behind. So, and that brings us to the New York Equity Open, which is the bare minimum of when I actually enter a trade. Okay, so here the equity opened. I have the open range gap here and the 5-minute fair value gap all set up. So here's something that I did notice. You can notice that there's a little bit of a delay. So I did trade the delay and I wasn't really thinking too much about getting in and holding a trade for too long. So just so you know, this is my first scalp of the morning. It is because it's delayed. You can see the candle is going up while these candles are just starting to paint. So there was just a slight delay and I did take advantage of that, and it was just a short scalp. So there's an open range gap unfilled up there, and so I am choosing to buy. So we're in a discount in that swing, and so I'm expecting that to be taken. So buy side to be taken and then sell side. So this is again a very short-term scalp, and now I'm seeing that price is actually going down, so I close this out very shortly. Okay, so I got 0.10 out of this, and I sit on the sidelines because sell side is on the menu, and so you can see that price actually goes down and does so aggressively. So I'm just watching and tape reading for the rest of the morning, and that brings us to the PM session. Okay, so price goes back to that 5-minute fair value gap from the New York Equity Open, and so I wanted to see how it's going to react to that. Okay, so here we have it touch the daily open gap as well as the algorithm open, so this would have been a really good place to actually think about selling because we are still in a bearish environment. We just took buy side on multiple levels and we are now breaking structure here. So we're going to have a market structure shift here shortly. Okay, so when we actually have that break of structure, we take that sell side, then this is where I'm measuring out the 50% and making sure that I can actually enter. Okay, so I just paused this because this is what I was seeing. There's balanced price range right here with overlapping candles. There's a bearish breaker here, and so that's kind of where I am confident that this is just a balanced price range. It's not going to go back up and certainly not going to go back up to my 50%. So that's kind of where I do choose on entering, and I do so with a 10 pip stop. So this is a 1% trade. You can see here that I have 29 lots, which is less than the 50 max for 8 cap, and so that will come in handy in the future. So it does start painting nicely down, and again, we're in a scalping environment, so I'm just thinking short term. However, I really need to work on my exits and scalping because I'm not a scalper. I really like to hold trades a little bit longer than just a couple of minutes and waiting for that big expansion down. And so that's where the thinking was a little bit skewed, and I was just kind of in this for recouping my account, and so I wasn't really in this for too long. So I start managing the trade and over managing it. So definitely some things that I would do differently. Okay, so I'm gonna fast forward this because it does just inch its way down. So again, we're in the lunch hour and we have a nice little push down. However, it just comes back and we have a 5-minute volume imbalance that it covers, and it's just coming back a little bit, and I'm just not comfortable in the scalping environment, and so I don't take my profits down here when it actually spikes down down. I am really looking for more profits, but if I can take a little bit out of the market and recoup a little bit, then I'll do that a little at a time. Okay, so here's where, again, we're accumulating here at that sell side at the open range gap low. And so I'm not super confident that we're going to continue down just because of all this accumulation. I find that accumulation can mean one or two things. So it can either mean that we're just going sideways just to continue down, or it can mean that we're reversing. So I don't want it to reverse, and so I'm kind of looking for signs that it is going to reverse. So if it goes any higher than that 1 minute fair value gap, that's kind of where I do decide to actually get out. Okay, so again, that 1 minute fair value gap is really where I want to just have that hold. And so I'm seeing a 1 minute fair value gap to the upside and a 5 minute bullish candle painting. So I just really don't like that, so I choose to get out. All right, so again, that's a 0.07% win. It's better than a loss. However, it does continue to go down. So as ICT says, the candles actually tell the story. And so the candle didn't actually close above that 1 minute fair value gap. So it just kind of scared me out because I am thinking scalping and I'm not thinking long term. So I already had my stop loss trimmed, and so it wasn't a great trade. It wasn't great management. In retrospect, it would have been a really great trade had I just stayed in it and been in it to win it. All right, so I'm just going to be honest here and just say that my next trade was not great either, just because of my management. And those are all things that I need to consider when it comes to my trading. Is if I am scalping, then I just take trades and choose to cut them at profit so that I don't actually have to overmanage it. And in fact, if I am very confident in the direction, I just need to leave it alone. Okay, so this goes nicely, and it does go into that 1 minute fair value gap. It does go into a breaker, so I am very confident that it's going to continue down. However, we have a 15-minute volume imbalance, and because price is kind of inching its way down and not really running towards the sell side, I'm kind of thinking that this might be a turnaround spot. So again, I'm not super invested in holding a long-term trade when we're in a scalping environment. And so long-term for me is like an hour long. And so that's kind of where I'm thinking I'm just going to take some profit and maybe try again the next time. Again, I'm not a super great scalper. However, I forced myself to do this because I had to recoup that 2.06. I'm seeing the overlapping candles and thinking that this could actually go up again because we do have some buy side. And I'm really just not super confident in this trade because I'm so zoomed in on the lower time frame and I'm not looking at the bigger picture. So while the S&P was going down as 1024, we actually had some consolidation with the DXY. So I was looking at that, and this is just kind of going sideways and it's not really in a direction that I'm used to, which is the DXY going up and the S&P going down. Okay, so I do kind of get scared out of this trade again. I'm overly managing this, and had I just accepted the risk, then this again would have been a nice trade as well because it would have gone. So it inches down. I'm looking at my higher time frame on my other screens, and it does look like it's continuing down, which would have been a nice little recoup. However, it starts to do this. So it starts going back up, starts retracing, and I'm not now thinking partial anymore. I'm thinking of just closing it all together. Okay, so it's really accumulating. I'm not liking the accumulation, and it's really not running for sell side, which I'm really expecting and wanting, and instead it just starts retracing. And so again, I'm not really thinking long term here. I'm thinking I'm going to get stopped out at break even or less because of spreads. And so that's kind of where my thinking process comes in. So again, we're at 1034, so it can definitely start going for buy side here in the PM session. And so we're really low in the actual daily expansion. And so again, I just kind of break even on that. You can see that I actually got out here, and that was a break even trade. So TFT actually recorded it as 0%, so I was fine with that. Okay, so that was the end of my S&P adventure for the day. So I was looking at the divergence in the indices and thinking of the Six Sister approach. Again, NASDAQ was lagging behind the other two indices, which were dropping. And so that's kind of where I switched over to the NASDAQ. So it was unfortunate that I didn't stick with those trades with the S&P, because shortly thereafter it actually did start running for sell side just like I wanted it, and it was because the DXY actually got out of its consolidation and started running for buy side. Okay, so you can see here this was the 15-minute volume imbalance that I got out, and it was just a small retracement and then it started dumping. So unfortunately, that would have been a really good trade. However, it didn't pan out because I got scared out of that trade. And was that fear? Yeah, absolutely. I would definitely say that it was fearful that I was going to dig myself into a deeper hole. It's just something that I have to consider and think about in the future. Okay, so this is where I'm starting to think of the six sister approach, which is any of the indices that are lagging behind the other two, and the other two, they're all in sync, but the sell side has not been taken on the NASDAQ. So I was thinking that was going to be the target next. And so you can see here I'm marking up the NASDAQ, just making sure that I have the right pip size because the NASDAQ is different. And so you can see here I have a very conservative 25.9 pip stop, and the lot size is 22. And so that's a 2% trade. And that's something that really opened my eyes to the NASDAQ. Okay, so the S&P took sell side and it was continuing to go down, and so was US 30. So I was looking at the NASDAQ as something that I was going to enter on that 5-minute fair value gap. So completely transparently, I don't actually trade the NASDAQ. I always watch it in correlation with the S&P. However, it's not something that I actively trade very often. Okay, so I'm thinking that's going to be a little too conservative. So 25 pip stop and 23 lots. So again, that's 2%, and so I'm looking just to recoup. So I just throw out with abandon because I'm not thinking it's going to go any higher. However, it just is a matter of patience. And so it does go into drawdown quite quickly after I click the button. And so you can see here that the NASDAQ is stronger. We are at the open range gap of the NASDAQ. So that's where I was confident that we're just accumulating to go down. And so again, these two indices were going down. And so we have some place where we could actually retrace. However, I was thinking that the sell side was going to be taken. There was a big 15-minute fair value gap as well below that sell side. And so that's kind of what I was thinking was the inefficiency that was going to be the target. All right, so we've kind of played around here for quite a bit, start going down. Now we're on the NASDAQ screen. And so I'm just watching the other two from my other screen, and I wanted to record this so that we can see exactly what the NASDAQ is doing. Okay, so it extends nicely and then it kind of retracts, and it does this for quite a bit. Okay, so you can see here that I've already trimmed my risk, and so if any of those PD arrays, because I am risking 2%, I wanted to make sure that I was really aggressive with actually taking profit. So any of those PD arrays were disrespected, then I was looking to get out and just close my trades. Okay, so it's extending nicely, and so once this sell side is taken, I was going to take, so 11.5 is about half of that. So I was taking half of that risk off. So I was only in this for 1% now. And so I was happy with that, a little bit of recoup. And so that was a little bit more that I recouped. It did sweep that sell side and then it started pushing up. So I'm in this for 1%. I had trimmed my risk. So I am probably at 0.5% because I moved my stop. And so now I'm at break even. So anytime that this PD array is actually going to be broken, then I was looking to actually get out. So I moved my stop to break even just to protect my profits, and this is what happened. So I am aware that NASDAQ is a little bit more wild, and so I did get a little bit more out of that. I think the whole trade altogether was 0.31%, and so I did recoup a little bit more. Okay, so I'm still thinking that this is going to be the six sister approach, even though it did have a retracement. There is a 5-minute bearish order block right here that it should continue to push price down if indeed all the indices are going to continue down. And so it does actually end up taking that sell side as I predicted with my target. So all right, so I'm still thinking that sell side is going to be the target, that we're going to continue down. Okay, so before I get back in, I am looking at where sell side is actually being taken on the other indices. And so the old high and the weekly buy side imbalance, sell side inefficiency low is actually being closed in. So again, this is another place where it's a little bit of a warning sign that we're getting down to a really deep discount. And so this is kind of where taking another sell on the NASDAQ was a little bit risky. Okay, so again, this is for 2%. And what I might do differently is just reduce my risk a little bit because I was in this for 2%. And I do the same stop loss with the same risk. And we are at that sell side liquidity already. We're starting to accumulate, and I'm still thinking that more of this sell side is going to be taken. So all of this inefficiency here with the 15-minute fair value gap, I don't actually have the 15-minute consequent encroachment actually marked up. So that's something I might do differently because I'm not quite sure exactly where I'm at in the inefficiency. And so here we go with the sell side for ES. And so the ES is actually going down to the daily consequent encroachment. And so that was kind of my terminus for ES. And that's where we continue down. So I'm thinking the NASDAQ is going to continue down as well. Okay, so again, I'm in this for 2% and I just hit sell again. I'm thinking that we're going to touch at least the bullish order block down there and fill the entire 15-minute fair value gap. And so this is what I have to endure. So the 50% of the consequent encroachment is about here, so it's a little bit lower than this. However, we just start accumulating here at my entry. So again, I'm in a little bit of profit, then it kind of retracts. So it's not doing a whole lot of extending down, and we're already in a deep discount. So this is something that is a little bit more risky. I do recognize that. However, again, I'm not super great at scalping. So taking my profits and just turning around and running is not something that I'm so used to. So I do like to hold on to my trades a little bit longer. And this is kind of the reason that I should not be a scalper, is because it does turn around quickly and it starts accumulating, and it's just not something that is my style. I'm not somebody that just likes to take short profits. So again, not in my environment, but definitely something that I need to actually work on if I come down to the wire again, because this isn't going to be the last time that I find myself in drawdown, and it's definitely not the last time that I'm going to have to battle myself back out and get back into profit. Of course, I would love to say that I would never do this again to myself, and I will do everything in my possible power to actually not put myself in this situation again. However, I know that I absolutely can do this. So that's kind of what was going through my head. And because we didn't actually extend down and we didn't break that structure on the 1 minute, I am thinking of actually closing this out. And that's what I end up doing. So I just close it out and I walk away for the rest of the day. So all in all, day 11, I recouped about 0.72% of my account, and that brought me to negative 1.34% to start on Thursday. I also learned something really valuable from that trading environment on Wednesday. So if you didn't notice, I traded a different pair that was correlating. However, what it did was actually open my eyes to circumventing some of the limitations that I've been facing with the 8-cap broker and the funded trader. Because I could risk more on the NASDAQ, I could actually recoup my profits a lot quicker on the NASDAQ and risk a little bit more and not run into the 50 limit lot size, which is super frustrating when you're trying to actually trade and you get the error message, oh, you can't do that much. So just so you know, the S&P is my number one. It's the one that I know the best. However, the NASDAQ is a little bit more wild. NASDAQ is my new favorite just because it's something that moves a lot quicker, has a lot more range, and also I can trade a little bit more. So I wanted to show you something that really helps me in my trading and really helped shift me from the Wednesday to the Thursday, because I gotta be honest, it was a little bit stressful to be in that scalping environment, to be in that situation where I only had one more day and I had to recoup 1.34%. So while some people can be like, oh yeah, that's perfect, I can do that in a day or an afternoon or just in one trade, that is something that I am still getting my feet under. And so I had to actually shift my mindset. So one of the things that I did differently between Wednesday and Thursday was I actually went back to my old trading videos. So I wanted to show you something that might help you, because if you're not recording yourself trading, then you're not really learning who you are and how you can trade better in the future. Okay, so my Zoom recordings, you can see here, I have so many recordings, and some of them are really valuable because they just show me tape reading trading. It just shows price action. This is all of my trades that I've taken for this year and last year. So it's already back from 2021 even. And so you can see here though that I have some where I actually passed phase 2. I actually won the phase 1 of the $200,000 challenge, and these are all with EuroCAD. So it was a completely different pair. It was back in 2021 and 2022. And so that's what I did between Wednesday and Thursday. I actually watched those videos and I was amazed by how bold and courageous I was as a trader. So all of this tentative, like, let me close it out because I'm in a little bit of profit and it's retracing a little bit for me, was not how I traded in the past. So that's something that I would say is remember who you are and who you truly can be, because if you've done it before, you can do it again. So that's what I opened the charts with on Thursday, and let's just dive into some of the trades that I took. Okay, so Thursday again, I was analyzing what the S&P was doing, and I do have to say that my overlapping candle process of just kind of anticipating what direction the next candle is going to be. If you don't know what I'm talking about, the O candle video that I have down in the descriptions, make sure that you click on that and watch that after this video, because the O candles are proving on the daily that it's actually going to go in the opposite direction. So I had already thought, okay, we're going to be in a buying situation here for Thursday because we had two overlapping candles that were bearish on the daily for Tuesday and Wednesday. So Thursday was going to be a bullish day. I just didn't know how bullish it was going to be. Okay, so when I opened up the charts, we had a big opening range gap below, and that's kind of where the trading day began for me. I just watched it go up and up and up all day long. So I don't know about you, but if it's your last day of the challenge phase, you got to get in. But you're waiting on a retracement or you're waiting for some type of Judas swing and it never comes, that gets to be a little bit stressful. Okay, so this is the first trade that I took in the morning on Thursday. And so I do have to say that I made a trading error. Because I was trading two different pairs the previous day, I actually had two different pairs opened on my tabs. So you can see here that the opening range gap is really big here on the E-mini, and that's what I was looking at for the S&P, and I was expecting that to be filled a little bit more. And so because we were oscillating here at the open range gap, then I was expecting some more downside for the sell side to actually be taken before we started going up. And ultimately I was expecting at least the daily fair value gap to be actually breached, and so that was kind of my terminus for the morning. And so this is just a short-term scalp to sell into this. But you can see here that I actually have my NASDAQ tab open, and so this is where I have 10 pips of stop for the NASDAQ. And you can see here that because I'm risking 2%, it's about the same that I would actually have for a 10 pip stop on the S&P. So there was no warning signs here when I was looking at just the numbers. And so that's something that I definitely have to pay attention to in the future, which is just looking at what tab and what pair that I'm actually trading. Okay, so you can see here that I actually sell here and realize quickly that I'm not in the right tab, because this is what the S&P is doing. It's doing exactly what TradingView does, and this is what the NASDAQ is doing. So NASDAQ is stronger, it's a little bit more wild, and so I'm already in drawdown. It could have been a really bad situation. However, it does actually turn around a little bit, and it's a very short trade. So I think I'm in this for 2 minutes before it actually pushes down, and I'm able to actually close out in a little bit of profit. So I do close this out. I get 0.14% out of it, and phew, I'm out of that trade, and I just kind of sit on the sidelines and watch price continue to go up and up and up without a lot of retracement and a lot of entries. Okay, so that brings us to the PM session. And so the PM session, you can see here, we're already above the new week open gap. It's an old one, and I'm expecting some type of retracement, but not super deep. And maybe we're at the high. We're already touched the daily wick of the consequent encroachment. I'm not quite sure which day that is, but I have a wick that's set up here. And we have a little bit of buy side. This dark green area is that open range gap from Tuesday that's unfilled, just like I was sharing earlier. And this is the blue section is the weekly volume imbalance, and so I am expecting some type of either push down and use it as resistance, or push up and use it as support. So that's kind of where I'm just watching what price action is actually doing, what it's telling me. And so it does just show that it's in a little bit of a retracement. So again, I'm looking at all three indices, really thinking about the NASDAQ in the future, and just seeing if I have a trade here on the S&P as well. So just kind of watching both. The NASDAQ is already pushing up for daily highs, and I believe at the point of where I was thinking of actually entering a trade, it had already taken like 4 daily highs. So it took a lot of buy side, and we're in between these two buy sides. So I'm already thinking that we're going to go up to this next buy side. Are we going to actually come down to this daily volume imbalance that I have set up? And we have a bullish order block. So we've already taken a daily high. However, I do believe the next daily high is also in jeopardy. So just watching all the indices, seeing where I can actually enter. Okay, so the NASDAQ continues to push up. It did touch the daily high here and used it as support. And so I have a 25 pip stop, and I'm now looking to target that short-term daily high. So that's kind of where it's just a short-term trade. I know that I'm already in a premium, so this is a really risky trade to put 2% on. However, I'm in this to win this. And so again, I have to be super aggressive because I'm already coming down to the wire. I only have about 3 hours left of trading in the day. And so it's 11:05, and I'm forcing myself to get into a premium situation because there's really not a lot of time left. So I actually turned my risk right away to a logical area, so it shouldn't go any lower than that bullish order block. I'm in this, and I really don't have too much attachment to it. I actually am like journaling here, but I am watching price action and seeing what it's actually telling me. So I'm just going to fast forward because it does come down pretty much to that 1 minute order block and then starts pushing up. So it's accumulating quite a bit here. So again, if you have nothing to lose and you have some wiggle room, the very last day of your phase, you can actually be really super aggressive and maybe even leverage more than you actually would in a normal basis. So I'm already looking at putting another 1% on this, and I am expecting that daily high to be taken. If I lose, then I lose the challenge and I'm totally out. It's okay. I have another challenge right behind it, and I'm working from abundance. So again, it is something that's really risky. It's not how I normally trade. However, I do put another 1% on it. I turn my risk right away to a logical area. I am expecting this to start going up. Again, I just want it to go up really quickly. However, it's just starting to consolidate. I want to note this because the ES is pushing up into that buy side. It's pushing up into that Tuesday open range gap. And so because it's pushing up and because US 30 is also pushing up, I'm expecting NASDAQ to also do the same. So it's a fairly good gamble. I would totally say that there's a luck to this and that I was actually analyzing this. It wasn't a great entry. It certainly wasn't a great trade. However, it just chooses to actually go in my favor, and I'm not in this for super long. So it does push up. It's going for buy side. It's going for that daily high. It does retrace a little bit more, and price on ES is also doing the same thing. It's going up and down and kind of digging into that open range gap. So this fools around for a little bit at that bearish breaker, and if it does choose to actually go down, I do feel like it would be protected by that old daily high. And so that's kind of where I'm just in this, and if I lose, then I lose, and if I win, I win. Okay, so it does push up, and that's kind of where I just close out. And so one more push up and I close that, and so 1.05. So one of the things that I wanted to share with you is that because I'm coming down to the wire, I also don't have a whole lot of time for the TFT system to catch up to my scalping. And so with that, I am kind of trying to monitor where I'm at with my account. Am I in profit? And I already know that I'm not. At the beginning of the day, I needed 1.2% after that morning kind of trading error. And so having recouped 0.91, I had about 0.3% left. And so that's kind of where I do walk away from this trade and walk away from my computer just shortly, because I want to reset and make sure that my mindset isn't just revenge trading and getting back in, and making sure that I'm really coming from that logical area and having the analyst actually in the driver's seat. Okay, so about 12:02, I actually think about trading the S&P because I am really sure that that open range gap is going to be filled and continue to dig up into it. And so that's where I am thinking of actually buying the S&P. And so I do so with 1% and it's a 20 pip stop. So I'm just trying for it to go a little bit in my direction. So it does start retracing from that premium and of course from my entry. However, had I just stayed with my normal stop loss, it would have been totally fine and it would have been in a safe position. However, this starts kind of a losing streak for me. So I'm already at a premium. It touches that new week open gap and then starts to reverse. So I'm again underwater a little bit more. I think I'm at 0.5%. I'm not quite sure because the TFT system is so far lagged. It takes about 5 minutes for it to actually catch up to your trading. And the profit and loss is just so unreliable in that time frame that I just stop looking at it and just kind of go for my gut. So again, I get in again a little bit later for a sell with the NASDAQ. And so this again is at a premium. I'm expecting a retracement. There's an order block. There's fairly equal lows here. And I'm just really gambling at this point. I'm just trying to recoup my investment and recoup that previous loss. However, I'm just digging myself into a grave right here. So the 5 minute dips down into that 5 minute imbalance and then kind of pushes up. So this is where I'm in this and I have nothing to lose. I'm watching price action. I'm expecting certain things and sometimes they pan out and sometimes they don't. And this is where it just continues to go up. And I do move my stop a little bit just to give it a little bit of room just to see if it is going to come down. And I'm not in a really great position just to allow this to go, but I do have some bullets in the chamber as far as, you know, my account. And so I'm willing to actually risk this and risk losing the actual challenge because I'm at the end of the day and I really have nothing else to lose. I've already lost this account, then I've lost it. Okay, so I'm already at 2% in this trade. I choose to buy again because it is making more bearishness. And so I have a 1% trade here. So this is where, again, I have nothing to lose other than the account. And can I live with that? Because I tried everything. Absolutely. So that's where I'm in this for 1%. My entry is not great. However, it does start to retrace down. And this trade actually takes a while for it to actually get back to my original entry. And the S&P had already taken the open range gap and started retracing as well. So this is where I could have closed out altogether and just tried to recoup. It's 12:58. It's already at 2%. This trade at 2% is the one that's underwater, and so this is the one that I choose to end up closing, and you can see what happens shortly thereafter. So it pushes down. I'm in a little bit of profit. Again, because I'm not sure where my account is, I don't actually know how much I need in order to recoup all of it. So had I closed this all together, I probably would have been in profit and been okay, and I'm not sure. Like, look at this, 12:59, it says negative 1.94%. So I'm oscillating back and forth between profit and loss on this trade, and I'm in this for 3% right now. So I need to actually wait for an actual drop, and this is not looking super bearish. So I do end up closing out one of these positions. It's 1 o'clock, it spikes up a little bit, it's oscillating back and forth. So I close out the 2%, and then immediately after that, it pushes up and closes out my 1%. So it actually lost a little bit on that 2% trade because of the spreads with TFT, and probably because the spreads went crazy for a short second there. And so of course I lost on this trade. I'm already underwater. It's 101 and we're down to the wire. We are underwater, negative 0.36%. So had I not remembered who I am at this moment, I probably wouldn't have entered another trade. I would have just walked away, just said, hey, I lost the account, and that's okay, because I give myself love and grace every step of the way, because that's the only way that I can trade, is to actually dust myself off from every trade, whether it's a win or a loss. And so price just ends up going up. I actually looked and tried to see if there was any kind of like news event or anything, because I've never seen this happen before. I've been on the charts at the very end of the day before, and it's never acted like a news event. event. So I was just kind of taken aback, like, whoa, what just happened? And again, I just give myself love and grace. I'm like, you know, if I lose the account, I lose the account. So here's where I actually enter another NASDAQ trade. This is the very last one of the day. I'm not looking for this to go very far. I want to recoup my profits, and I want to do so in a very short amount of time because I don't actually know how much more time it will actually move, and the algorithm might start pittering out and might start just, you know, accumulating here. And it's 104 and it's just really down to the wire. So I actually changed this to 3% and I make a very conservative stop loss, and this is on the NASDAQ, and I do expect some type of retracement. So I'm in this at 105 and I'm just watching to see how much I can actually get out of this trade. So from my best guess, I was probably underwater 1.7%, something like that. Again, I don't have time to actually watch the TFT actually oscillate from being negative and being positive and all of that. So between their countdown timer and the time that it takes to refresh their accounts and the balances, it's pretty stressful with the funded trader. So again, is it my fault because I need to just be in profit all the time? Yeah, that would be great. I would love that. However, I just have to deal with it. So if I choose to actually use them in the future, then it's definitely something that I need to consider, is the being in profit, how long it takes for me to actually trade, the spreads, the countdown timer, all of it. Okay, so needless to say, this actually retraces a little bit. Let's keep going. And just because it had such a big push up, I was expecting it to continue down. If it didn't, then I was okay with that as well because I had nothing to lose. I could have just lost the account and I would have still been okay with that. So this is where it starts pushing down a little bit. I'm in profit. Again, I don't know how much I actually need to recoup. And this is where it does start pushing down nicely. So I'm thinking of just taking off most of it at that breaker. And in fact, I've found in my past, just watching myself, that it's just best for me to take off the full position. So I do end up doing that right there, 114. I had about 45 minutes of the rest of the day and it just ends up oscillating and accumulating just like I was expecting. And so I'm not quite sure if I made it or not. And so that's where I pull up the account. You can see here that the account on TFT at the end of the day was still negative. You can see that I wasn't quite sure. I had to refresh it and it's 118 already, 3 minutes later, and it says negative 1.84. So I'm not quite sure. I did get over 2% on that trade, so it should be in positive. And so I come back again and 121, it's about 7 minutes later, I'm at positive 0.38%, which is where my account actually settled. So that came down to the frickin' wire. I can't say that I didn't have a little bit of help from above, so thank you for sticking with me. It was actually a very stressful week. I didn't have a lot of sleep and it was kind of weighing on me because although I wanted to focus on abundance, although I was wanting to actually crush the challenge and actually pass the phase, I just had to get myself back up above water. So you can see here, it did take me 12 days to actually get this back up to 0.38%. And you can see all the trades that I took from this week. So starting on the 26th, I did have a lot of wins. They were very small wins. And on the 27th, I had 3 losses in a row and then finally just recouped it all in one fell swoop. Now, is that trading that I love? Is that trading that I'm really proud of? No, but the end result was exactly what I was pointing at. And one of the things that I'm really excited about is that my Candle Concep is actually starting to pan out, and I'm starting to see the benefits of it in my trading as far as the bias and as far as the daily candles actually overlapping and then the following day being in the opposite direction. So again, if you're curious about that video, make sure that you're looking at the description below. Click on the candle and you'll see that there's plenty of examples on multiple different time frames of this actually panning out. So my friends, I'm really excited about this next phase because I'm bringing back the aggression that I had, the trader that I was back when I passed the challenges in 2021, 2022. No longer am I going to be this conservative little meek trader that I've been because I've been in student mode with ICT. So nothing against ICT, he's a lot more conservative, but I know that I can actually do this. I know I have the skills to accomplish what I'm looking to accomplish, and that's going to be a 7-figure trader. So my friends, the evidence of your greatness is in your past as well. So make sure that you're reviewing your trade journals, reviewing your past videos of when you actually accomplished some major goals of yours, and you will see how great you can be as well. So if you've done it in the past, if you've done it before, you can do it again. All right, my friends, I hope you got some value from this video. If you haven't already, subscribe below, because the day of me becoming a funded trader, a profitable trader, a 7-figure trader is coming very shortly. So I don't know when that shortness is. Is it going to be a year? Is it going to be 5 years? Is it going to be 10 years? It better not. So I know that the time is coming, and if you want to come along the ride, then make sure that you subscribe below and you can follow this journey, and I'll share more tips and tricks and my trades along the way. All right, my friends, thank you so much for tuning in, and we'll see you in the next trade. Bye.